What's up, everyone? Welcome back to my channel.
Earn it, save it, invest it.
A lot of you are thinking, man, my portfolio is getting smashed. This stock market crash is horrible.
I have Exxon at 86 and a quarter 6 months ago. Today it is trading at 36 and a half. Mr. Butts.
Activity, you don't know what's going on here.
I know.
I'm going to explain to you in 5 to 10 minutes on how you can figure out if we're in the bottom of the stock market crash, and if we are, how to make money on it. The only thing I ask from you guys is to smash that thumbs up button. It does a lot for the algorithm, a lot for my channel. Give a subscribe if you like the information, and let's get to it. All right, so the number one indicator that people like to go to when it comes to checking out if we're at the bottom of a stock market crash is the VIX. It's the volatility index. Now, essentially, when the stock market gets really crazy, right? Usually it's on the downside, because when the stock market crashes, it will crash faster than it will go up. Almost always, right? COVID was an exceptionally weird time, but you think even at that, it crashed so hard, so fast, and it went up slightly slower than it crashed, right? So it gets really volatile when things are crashing. So the VIX will spike up when the market is crashing. It does not spike up when the market is doing well, because it's not usually volatile like that. When the stock market's going up, it's a fairly calm and cool, collected going up. Again, COVID was a little bit crazy, but again, the VIX will spike up when the stock market is crashing, and then it goes down when it is recovering. So a lot of people look at the VIX and say, hey, when it has spiked and now it's coming back down, that's probably the time to buy, right? Because you've now hit the top of the volatility. Everyone is starting to calm down now, and now things are getting back to normal. So what I'm going to do is I'm going to break down the VIX. I'm going to go over some of the most volatile times that we've had in the VIX, and we're going to see whether or not that actually was the time to buy. If it was the bottom, if it wasn't, and we're just going to break it down to see what kind of results we get. So let's get to it. So right here is the last year of the VIX, and you can see that we have spiked once in August 2024, and then we spiked heavily recently, April 2025. So if we go back to the S&P, and we can see this is where that spike was in the VIX 1 year ago in August of 2024. And here we are again, April 2025. Now, when you see here, August 2024, it was the carry trade. I'm not going to go into it, but there was just some scare in the market, and there's a panic selling. So what happened was the VIX spiked, right? The VIX spiked up. Everyone started panicking. Volatility just spiked tremendously. It reached all the way to 65, which is actually a very high number. The VIX has hit 60 only 4 times since 1990. And in this last year, we have hit it twice. So in the last year, if you did not buy during these times, like you missed out on some money probably. Now, I'm not going to exactly spectate on this last one. And it also depends on who you are. I want to make this very clear first and foremost. It depends on what kind of investor you are. If you are a long-term investor, you didn't make money on any of these spikes, because the only way you make your money is when you sell a stock. You can't make money by holding a stock. You make money by selling the stock that has gained in value. So if you are a long-term investor, which I'm more long-term thinking, I don't really plan on I'm going to buy at the bottom here and then sell in 5-6 months or the next year, right? But I will say you will have made a lot of gains on your holdings, right? If you did buy back then and you were holding on to them, you have gains on those holdings. Now, if you are a short-term investor, a trader, you will be looking at the VIX, and you will see it as more of a short term. Hey, how can I start buying now and then start getting rid of this sooner rather than later? I hope most people that watch my channel are long-term traders or long-term investors. So, this is more about just trying to catch deals. Now, I heard Warren Buffett say this one time, and it just changed my whole perspective of thinking about the stock market. If you change the word stock and put grocery, your whole perspective would change, right? Let's say you went to the grocery store and the things that you love the most were on sale. The product did not change, right? The grocery store seemed like the lights were a little bit more dim, right? The cashiers were wearing their own clothes. They weren't in uniform. The market seemed a little bit different, a little bit weirder, but all of your products were the same. And your products are in other stores, all that, right? So your product is the same. It's just a different price. It's now discounted. Do you really think, and that store, that market is owned by and run by some of the biggest people in the world? That market is not just going to keep letting everyone wearing all their clothes and all the lights are going to go off. They're going to fix the light bulbs. They're going to get uniforms for the workers, right? And the market is going to get back to normal. But currently, because the market is not, they have some light bulbs out, your prices on your strawberries or your dinners or your this or that, right? Everything is off 10, 20%, 30%, 50%. If you walked into the grocery store, into the grocery market, and saw all of the things that are good on sale, you would buy more. You would want to if you could. But when the stock market does this, everyone panics and freaks out. Doesn't make sense. A lot of these companies haven't changed. Yes, we have some stuff with the tariffs, and there's always going to be economical things happening, but at the end of the day, these companies get through it most of the time, right? Excuse me, I got construction going on next door. But most of the time, these companies are doing well throughout the years, right? And to just say, oh my God, it's panic mode. Everyone's that I just need to sell too. That's just not the right decision. You should be buying when things are on discount. So that was just a quick little rant about when you think about the stock market like a grocery market. And if you walk in and you saw your favorite items and the biggest and the best products ran by the best companies, but they were on sale, you would either buy more or wish you had money to buy more, right? Again, we're talking about perishable items. You can't store that many fresh strawberries. I get it, but you understand the point too. So if you have that mindset going into it, it will be easier for you to invest when things are going bad in terms of the market. So when the VIX spikes, that usually means that the market is going down. It is crashing, but it also means that this is the best time to buy. So let's say right here, right, August 2024 and April 2025, and you can see August 2024, we had a dip, and then April 2025, we had a dip. Now, I want you to be very clear about this too, or I will be clear about it, is that just because it spikes, just because this spike was bigger than this one over here, August was bigger than April, it does not mean that it was the bottom for everything, right? If you bought in the August 2024, right, VIX, and you're like, oh, I'm going to hold on to that, and then you were waiting, and then April came around, you were actually down on your positions. Even though the VIX spiked less, it doesn't mean that the market is going to crash less. It just means that the volatility was a little bit less, right? That, like I said, the carry trade was just its own little thing. It was so quick, right? And you could tell that it was a lot quicker. It went from July to August. I mean, that took a month. Right? When this one was February all the way to April, 2 months. It was twice as long. So we had more information. We also kind of saw this coming. We also knew Trump was about tariffs, so we could see that this was going to happen. Anyway, this video is more about looking at the VIX and then looking at the stock market and seeing, is it a good time to buy when the VIX spikes? So let's just break that down. Yes, it is right here, right? August 2024. If you would have bought in August 2024 when the VIX was spiking, when it passed into the 30s, into the 40s, 50s, and 60s, if you catch it when it's going there, if you catch the market, you are more likely to make money, at least in the near term, in the short term, right? I don't want to, in the short term, depending on your time horizon, but within a year, you lost money. So actually in the short term, it is way more possible for you to lose money still. But over the long term, not so much. And we'll go over that. So again, the VIX is spiked. And this is a time to buy, not to sell. So you only lose money too if you sell. Just keep that in mind. You only make money when you sell a stock. You also only lose money when you sell a stock. Now, if you obviously know the stock, if that stock is going to keep going down, you might, but if you would have bought here, didn't sell, just bought more here, what do you think is going to happen? What do you think is going to happen over here? You think we're just going to keep going down? Well, let's look at the S&P 500. Let's look at the S&P 500. Let's just look. We have a bottom right here, October 2023, right? Here was a big bottom, right? We go boom from July of 2023 all the way down to October 2023, right? It was just not doing well. So let's see what the VIX did in October 2023. October 2023, it spiked. Now, I want to focus more on, when it comes to the VIX has been going since the 1990s, right? 1990. I want to focus on these really big spikes because we just had two enormous spikes in the VIX in the last year. They both hit 60, or at least right around there. Usually it doesn't. You see, since 1990, it hasn't done that. Only a few other times. One was in 2008, 2009, which we all know, great financial crisis, and of course, COVID. But that's it. All the other times, it hasn't spiked that much. So let's go back to this spike. Let's go to, COVID. Now, it started at spike in February. This is going by month. These candles are month. February, March, April. And in March, it really capped off, right? And in April, that's when it started going back down. And of course, when you look at 2020, right? February, drop off. And it quickly, look at this. February, the second week of February, the third week of February, into the second week of March. It took 1 month for the COVID crash. It went so fast. And if you had just held on here and just bought more here, you made so much money, right? So let's see. Let's see. We had our big drop right here in 2022, right? We had all the interest rates and inflation, right? Let's see what the bottom was on this. October 2020. I have to say this too. October seems to be just a month of either bottoms or crashes. It has a pattern for some reason. But October 2022, we hit the bottom, right? Now let's see what happened. October 2022. February, March, boom, October. So you can see October wasn't even, we had months of just volatility, right? But it pushed down. This is when it started pushing down, right? This is when the volatility dropped off. All of a sudden, we're like, hey, you know what? We're not going to be so volatile anymore. And we're just going to start being regular again. Maybe that, that's what happened. But look at this. This was like a consistent, it was just bad. Like you see all these little candles, it's because it didn't stay in that range for too long. The VIX was just everywhere in 2021, 2022. But you can see it started to rise in August 2021, right? August 2021 was here. We had a little dip. That was kind of telling us maybe something's going to happen. And we didn't listen. There's a lot of indicators. All right, let's go back. We already did COVID, right? That was April. Well, you can just zoom out and you know which one that one is. It's right here, March. Let's go back to the other one that hit the highest ever great financial crisis. It hit 96, 95. That's just insane. Basically, the whole world was freaking out, or at least America. September 2008 is when it started. October 2008 is when it peaked. And December to January is when it started to come down in 2009. 2008, 2009. So let's go to those times. October, start to crash. October, man. Just watch out for October. Watch out for October. You know, I'm actually going to make a video specifically on October. Why you should avoid October. Or if we're in a crash, why you should take advantage of October. But anyway, October, and we started our crash. And March 2009, we started our recovery. Right? I mean, yeah, right? That was a great financial crisis time. So October to March. October or September is when it started to go up. October is when it peaked. And it actually, it kind of went up a little bit March, and then that's when the big drop off started to begin, right? That's when, okay, now we're getting back to recovery, right? Just because you're in recovery mode doesn't mean you don't have some dips and stuff like that. That's what happens. All right, now let's check here. The top was August, April, March, April was starting to show a little bit of signs, right? And then August, September dropped off. And October, of course, October was right there in the beginning. It has to be. And then March, recovery. So we have what? August, September 2000. August, September 2000. And if you actually look at this, right? This was the dot-com bubble, the crash. Look at this. The VIX didn't even reach nearly as high as we've had in these moments. This is one of the biggest crashes in history that we know of, at least in certain industries and markets, right? Like the tech industry got destroyed, but just in general, right? This is the S&P 500. This is not the NASDAQ. NASDAQ got destroyed way more, right? But we're looking at August and all the way to February. But let's just look at these numbers. August. This is a peak right here, right? July 2002, September. So here's a big one. August 98, October 98. Listen, right here, right here. July, August, September, and then, right, we had the crash, and then it came back up. And then we completely and utterly crashed later on in August of 2000, which is really strange how that's one of the lowest points of the VIX is August and September of 2000. And then it jumps up, right? But it was a little bit different back then. Now I feel people panic a little bit more. We panic more. I mean, when you can see that the average is higher, right, than in the recent 10, 15 years as it has in the previous 10 to 15 years of that. But to conclude this whole thing, the VIX is a really good indicator on when you should start buying and selling. You know what? I don't want to even talk about selling stock. I don't really like the thought of that unless you're looking at a business and their fundamentals are wrong. I've invested in companies, and then after a year or two, I'm like, you know what? They're not turning out to what I thought they would be, or the fundamentals have changed. Like you look at something like Tesla, 5 years ago, 7 years ago was an amazing investment. But now it's, you look at the company, you look at the CEO, Elon Musk, who is just doing all kinds of things with Doge and X and, it's SpaceX. I mean, SpaceX is not too much. It's, very technological, and I'm sure you can integrate some of the stuff with SpaceX to Tesla, but he's doing the X and the Doge and all this other stuff, the political stuff, and that's taking him away from it. And so that company has changed and the numbers have changed. The growth has changed, right? The company itself as a growth company, as a technological revolutionizing company is just not there anymore. It's not the same. So when you look at investing something like a Tesla 7-10 years ago, it was a lot different than investing into it now, right? So when I talk about selling a stock, it would always have to be based on those kinds of things, the fundamentals, the numbers, the money it's making, the growth, all of that stuff. The VIX in itself, as you can see, is a pretty good indicator, though, on when you should always be buying. You should always be buying. This is not, the VIX indicator is not to tell you when you should start buying. It should be telling you when you should buy more. Okay? So when you just look at the big spikes, November 2008, we have the March 2020. Obviously, we all know what happened in COVID. Then we had the weird carry trade in August, and then we've had this recent one in April. Now, we are still down. Year to date, let me do it 1 year. I mean, look at this. We are still completely down. Now, if we wanted to go up, I got a lot of charts on here. If we want to go up from where we are right now just to the recent peak, you're looking at 12%, and that's just the S&P 500, right? So, if you have individual stocks, they've probably crashed a lot more, and they probably have more room to run. Like a Meta right now, I think is at like 500 something, 528, and it was at 700. I think this has a lot more room than just 12%. This has 38% room to go up to hit the peak that it was at, right? So, the VIX is a really good indicator on when you should just start buying more. You will never know when you're at the exact bottom of a stock market crash. There's just no absolute indicator. There never is. And you should never try to time the market. You should be just trying to have more time in the market. That has been proven to be the most efficient, profitable, and easiest way to invest long term. If you're a trader and you're trying to get in and out of stocks, that's different. But what I try to promote is the long-term trading or long-term investing. You buy now and you're not going to pull it out for 10, 15, 20 years unless, again, that company has completely changed. If you invested in Tesla 10 years ago, you're still, even with the crash that it has gone through, let's go through Tesla, right? Even with this crash that it has gone through recently, right? And this crash that it's gone through recently, it was at 400 something, right? And it's been here, it's been in the 300s before plenty, but it crashed. But if you bought back here in 2019 at $24, you still 10x your money, right? You're saying, hey, the fundamentals have changed. Still at a 10x, you can go and move on and you've invested, right? There's all different kinds of ways you can look at it. I like to invest into certain companies, and I definitely promote people. I'm more active. I look at charts. I'm obviously more active on it. For people who are they want to be passive. You think of passive income, which is just money that's coming in, and you either are doing very, very little work, or it's just work you've already done. You don't really have to do it, and it's just making you money. You just invest in index funds. You can invest in the S&P 500, the NASDAQ. Those are my two recommendations. You can also go put a small percentage of that money into a leveraged index fund. So you have something like a QQQ, right? This is based on the NASDAQ, right? This index is based on the NASDAQ. Now, if you look at it, how it's gone up, let me just do a 5-year chart, right? Let's just do all. That's how much it's gone up, right? It's gone up. And if I do percent, it's gone up. The Qs have gone up 800% since the year 2000. Now that's good. It goes up 1%. When it goes up 1%, the leveraged goes up 3. So the TQQQ, as you can see, is like, oh my gosh, these crashes are extreme, right? You look at the crash, okay, yeah, but it's still up since 2010. 12,000%. So you have the QQQ, 800% since 2000, or TQQQs, which is up 12,000% in just 13 years, 14 years. No, maybe about 50, right? So you can put a small percent in the TQQQ, have some of that growing at a higher rate. You can have some in the QQQ, right, where it's growing at a slower rate, but a little bit more safe. And then when you come to a point where you start crashing like this, you start buying a little bit. You can buy a little bit more here. If it dips down here, that's fine. Buy a little bit more, right? Over here, anyone who was buying here will make money. Even if you bought here and bought here. Let's say you bought here and here. I'm just going to look at this. If you're like, oh my God, like, look, this is a crash, right? This is a crash. I mean, it dropped 30%. It dropped a total of 40% or more, right? Oh no. If you bought money at that peak in 2015, you made so much money. So much money. Continue to buy. Just buy more when the market is crashing. That's it. Just like a grocery market, right? A grocery store, it's very similar to stock market. If you went in there, all your favorite stuff was on sale. Again, non-perishable. I get the storage fact of it, the storage side of it. You'd want to buy more. So look at the VIX and ask yourself, do I have a little bit more to invest right now? It's spiking, and I think I'd like to buy a little bit more of the stuff that I love, right? I'd like to buy more. So thank you for taking your time to watch this video. Please subscribe if you like the information of it. Again, just focus on long-term trading. You should always be buying, whether it's every week, every month. You should be consistently buying throughout the times, especially during the bad times. I know it's like a weird way of thinking, but that's how you have to do it. It's just how you have to do it. You don't have to get emotional. Don't get emotional with the stock market. Don't. The VIX is literally the emotions. If you want to see the emotions of the stock market, that's the VIX. The VIX will show you how emotional, not anything else. It's just how emotional it gets and the opportunity you possibly can have to make some money.
Thank you for watching. I really appreciate it. Subscribe if you enjoyed all this. And yeah, thank you for watching. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.